Welcome back to Smart Market Watch. Today, we're talking about Nvidia and their recent stock split. If you've ever wondered what a stock split is, why companies do it, and what it means for you as an investor, you're in the right place. We'll break it down in simple terms and talk about how the stock has performed since the split. But before we dive in, just a quick reminder, this is not financial advice. Always do your own research or talk to a financial advisor before making any investment decisions. Now, let's get into it. So what exactly is a stock split? Imagine you have a whole pie. Let's say that pie represents one share of Nvidia stock. Now, if you cut that pie into 10 slices, you still have the same amount of pie, but now it's divided into smaller pieces. That's essentially what Nvidia did with their 10-for-1 stock split. Before the split, on June 7, 2024, Nvidia's stock was trading at $12.08 per share. After the split, each of those shares was divided into 10 smaller pieces, which brought the stock price down to around $120.89 per share. So if you owned one share before the split, you now own 10, but the total value of your investment hasn't changed. It's like cutting a big pie into smaller slices. You don't have more pie, just more slices. So why did Nvidia go for this 10-for-1 split? One of the main reasons is to make the stock more affordable. A high stock price, like Nvidia's pre-split price of $12.08, can make it difficult for smaller investors to buy in. By lowering the price per share, Nvidia is essentially making it easier for more people to get a piece of the action. Think of it this way. If the pie was really big and expensive, only a few people would be able to afford a slice. By cutting it into smaller, more affordable slices, more people can get a piece of the action. This was Nvidia's goal, making the stock more accessible to a larger audience of investors. So, how did investors react to this stock split? Generally, stock splits are seen as a positive signal. It's a way for companies to say, hey, we're doing great and we want to make our stock more accessible. After Nvidia's 10-for-1 stock split on June 7, 2024, the market responded with excitement. Many investors saw this as an opportunity to buy in at a lower price, especially since Nvidia is a leader in industries like AI, gaming, and data centers, all sectors that are experiencing massive growth. However, analysts had a mixed consensus on Nvidia's valuation before the split. Some expected a potential downside of about 6.51% on the stock's $12.08 closing price. But even with those concerns, the split allowed more investors to access Nvidia shares, which has kept the company in the spotlight. After the split, Nvidia's stock saw an uptick as more investors were able to buy shares at the new, lower price point of $120 per share. The company's strong position in AI and gaming technology has kept demand high, and Nvidia's stock surged to $135 shortly after the split. But since then, it has been a wave of up and downs, with the stock pulling back to $100 in August before returning a high of $130. It then pulled back in September to $102. At the time of posting this video, it was sitting $116. Like many other tech companies, Nvidia's stock has experienced volatility, largely due to broader market factors like inflation and interest rate hikes. Despite these ups and downs, Nvidia remains a long-term favorite for many investors due to its innovation in graphics processing units, which are critical in everything from artificial intelligence to cryptocurrency mining. This recent stock split wasn't Nvidia's first. In fact, the company has done several stock splits in its history. The first one occurred in 1999 when Nvidia's stock split 2-for-1, followed by two more 2-for-1 splits in 2000 and 2006. Each time Nvidia has done a stock split, it was a signal that the company had grown significantly and it wanted to make the stock more accessible to a larger pool of investors. The 2024 split is another example of Nvidia's continued growth and dominance in the tech space. Stock splits aren't unique to Nvidia. Other major companies have done similar splits, especially in recent years. For example, Apple did a 4-for-1 split in 2020, making their shares more affordable to a broader range of investors. Tesla also did a 5-for-1 split in the same year, right around the time their stock price was soaring. These companies, like Nvidia, use stock splits as a way to bring more retail investors into the fold, increasing liquidity and making shares more attractive. So, while the total value of the company doesn't change, the lower price point can drive more demand, which can lead to long-term growth. Let's break down the benefits of this 10-for-1 stock split. First, it increases liquidity, which means more shares are available to trade at a lower price. This makes it easier for people to buy and sell Nvidia stock. Secondly, there's a psychological effect. A lower price per share makes the stock feel more affordable, even though the company's overall value hasn't changed. This can attract new investors and, in some cases, It can even drive the stock price up over time as demand increases. Finally, stock splits generate positive media attention. Nvidia's split created buzz and excitement, bringing more attention to the company and keeping it top of mind for investors who might have been priced out before. So, to wrap it all up, Nvidia's 10-for-1 stock split, which happened on June 7, 2024, brought the stock price down from $1,208.88 to about $120.89, making it more accessible to a wider audience of investors. This move increased liquidity, attracted new buyers, and kept Nvidia in the spotlight as one of the top tech companies in the world. But remember, just because the stock price is lower doesn't mean the value of the company has changed, so always do your own research before investing. If you found this video helpful, make sure to give it a thumbs up and hit that subscribe button for more stock market insights. And don't forget to ring the notification bell so you never miss an update from Smart Market Watch. Thanks for watching, and we'll see you in the next video.